I just backtested my version wick theory scalping strategy, which is my take on ICC strategy by Trades by Sai. And I backtested over 70 trades on gold and NASDAQ and got pretty good results. This is just for the month of December. But yeah, we had 43 wins, 30 losses, 58.9% win rate, total of 45 R, with an expected R per trade of 0.62 R. So yeah, pretty promising. Stick around and I'll go over exactly what the strategy is, how it works, everything around the strategy, including timings, stop loss, take profits, risk management, all that stuff. And then I'll go over how I conducted the backtesting strategy. And then I'll actually show you the live backtesting process. And then we'll go through a further breakdown of the results. All right, so a super quick 5-second summary of the virgin wick theory strategy. So it starts off with virgin wicks. So what a virgin wick is, it's any wick that has not been touched before. So if you look at any exposed wick and you draw a line to the right and does not touch anything, that is a virgin wick. So that's a virgin wick, that's a virgin wick, that's a virgin wick. So essentially that's what virgin wicks are. Any wick that has not been touched, it goes all the way right to open space. So we want to look for a big Chad candle to close through a virgin wick, which then creates our bullish point of interest. So we then mark that virgin wick level as a bullish point of interest because our Chad candle was bullish. So therefore we look for longs from that bullish point of interest. So then in the next hour, we want to drop down to the 1 minute and look for price to come down and close below the point of interest on the 1 minute time frame. Okay, close below. And then we want to see it come back up with either one of these two entry models, either an engulfing candle, meaning you get a green candle close above the open of the candle that took us below the point of interest, and then we enter our long there, or we want to see a close back above the point of interest after inversing a fair value gap, as you can see here. That is the strategy in a nutshell. I'll go through a super quick example. So let's say this is live price action. It's the 7 a.m. candle is about to close. So we can mark off our virgin wicks that are getting closed through. So this one, and this one. So therefore these become our bullish points of interest. Then from 8 o'clock, start of the next candle, we can drop down to the 1 minute. Here's 8 o'clock. And start to look for price to engage with the POIs. Okay, so here we get a close underneath the first one, but we do not get an entry model above it. Okay. Then price is floating around. Okay, we get a close beneath the second point of interest, but no close above it yet. Yeah, people ask, what if there are multiple point of interest? Then you just look for your entry model to appear on any point of interest, whichever one presents it first. Okay, so we keep looking. Okay, so do we have an entry here yet? Well, there's two possible entry criteria. One is an inverse fair value gap. So there's your fair value gap through this POI. We do not close above it, so no entry there yet. Our next possible entry would be engulfing this candle that took us below this POI. So we would have to close above this line. Nothing yet. Bang. Okay, there you go. We get a close above this opening of this candle. So there is your engulfing candle. So you would enter along there. Personally, I think putting your stop below that swing low is a bit too far. So I would go just below this candle, the entry candle, and then you can target the most obvious draw on liquidity, which is this exposed wick up there. So what's that? 2.44R. But I have a rule right now. I'm only aiming for 2R maximum. So that would be the trade. And then, boom, there you go. You get your TP, 2R. Nice and easy. And then real quick, let me just get rid of these POIs and show you this indicator, this Virgin Wick Theory indicator, essentially it just plots out the points of interest for you. See? These are the lines that I drew before, but the indicator does it for you, and it does it for the next hour, which is perfect. And this will come in handy when I go through the backtesting process, because it saves you from having to switch from the 1 hour to the 1 minute every hour. You can just stay on the 1 minute, and this will literally just plot out all your points of interest for you. So green for the bullish points of interest and red for the bearish points of interest, but we'll get more into that later. Okay, so this is what I call my trading Bible, which is just a more detailed breakdown of how I utilize the strategy and the entry model. So as of right now, I'm trading NQ and GC as my assets. I'm trading Asia, London, and New York because I'm still gathering forward testing and back testing data to find out which sessions are most profitable. So I'm just looking at all of them for now. But yeah, Asia is 8 to 12, London is 2 to 5, and New York is 8 to 11. This is New York time. My time frame alignment, as explained earlier, is the 1 hour for my high time frame analysis and then the 1 minute for my entry model. I'm risking 10% of my available drawdown per trade. So since I'm trading a bunch of 50K prop firm accounts, that is $200 risk per account. Yeah, like I said before, the take profit is the most obvious swing point as the draw on liquidity. Or if the draw on liquidity is too far, like the most recent example, then I'll just go for a flat 2R. There must be an obvious draw on liquidity. I will not target empty space. If there is no target, I will not take the trade. Minimum 1.5R, maximum 2R, as I said before. Stop loss will be at the most recent swing point or just below the entry candle if the swing point is too far. I always accept the risk before taking the trade. The trade will either hit stop loss or take profit. I will not take partials. I will not move to break even. I will not do an early take profit. It is one outcome or the other. No other way about it. My rules are I journal every trade. I follow the strategy like a robot. I take every trade that is presented to me. I will never hesitate due to fear. Regarding the POI, it is only valid for the next hour, which is why, as you saw with the indicator, it will only plot it for the next hour, which is perfect. And I'll restart the process after every hour ends. And I will get out at the end of every hour, regardless of where the trade is at. So, for example, if I was still in the trade and we got to 9 a.m. here, I would manually close the trade out. And yeah, the last thing is I will not enter a trade in the last 10 minutes of an hour just because the hour is going to close soon anyways. So there's no point. Yeah, strategy we already went over before. Wait for a 1 hour candle to close above Virgin Wicks. This is for a bullish example. Then those Virgin Wick levels become bullish POIs, which we then drop down to the 1 minute and look for a candle to close below the POI, and then either an engulfing or an inverse fair value gap. Entry model back above the POI, and then we enter, stop loss at the low, TP at liquidity. Simple. Obviously, opposite for a bearish setup. Just some reminders because I feel like psychology is 80% of this. The model doesn't matter if you can't execute properly. So some reminders I like to have process over profits. It's about executing. A perfectly executed red day is more important than a poorly executed green day. Most recent information is king, so if you have conflicting POIs, it's because you are not looking at the most recent hourly candle. Anything can happen, and that's okay. You just have to trust your edge, understand that this is a probabilities game, and an edge is nothing more than an indication of a higher probability of one thing over another. And you can lose more than half your trades and still be profitable. So it's okay to lose. It's totally fine. There will be losses. It's part of the business. There is no model in the world that has 100% win rate. And lastly, just be grateful for the opportunity to make magic internet monies by clicking buttons on a screen. It's a pretty crazy world that we live in, and yeah, we should be grateful and take advantage of that opportunity. Yeah, so essentially what I'm doing for this backtesting process is I've got my chart here and my data sheet here. So I've only got two indicators. I've just got the sessions kill zones indicator just to show me at what times I can actually look for trades. So there's New York, there's London, and there's Asia. And then I've just got the version wick theory indicator to show me where my POIs are. So I don't have to switch to the 1 hour, back to the 1 minute. I can just stay on the 1 minute and just scroll all the way back and look for entries. And then what I'm doing is just, I'll look at some POIs, look for them to be engaged, and then present an entry model like here. We get an inverse fair value gap. I would mark where I would enter, where I would put my stop, where I would put my TP. And then let's say this one, for example. So this is during New York. All right, New York. And this is gold. So I would go gold, December. Entry model is inverse fair value gap and engulfing, because we engulfed this candle here. That took us above the POI. And then session would be New York, and that would be a +2R. So that's the process I'm doing. And now we'll switch over to me actually live backtesting. All right, so as you can see, I've already gotten started just to familiarize myself with the process before actually recording it for you guys. But yeah, so far on gold for December, working my way backwards, we've got a loss, 2-hour win, 2 losses, and then a 2-hour win and a 1.5-hour win. So let's continue to go back through the sessions. London here, nothing there, no POIs, presenting the entry model. Asia. We do get one here actually. So you can see this bullish POI created by our lovely indicator. So we get a close underneath it and then a engulfing candle right after it. So there is your entry. I would go stop below these lows because that's really far. Target that high. Yeah, 1.5R. Nice. So that's an engulfing entry for Asia, 1.5. Right. Okay, let's have a look at this New York. So as soon as the candle opens, we do actually get our close under it on the very first minute, and then an engulfing right after. So that would be your entry right there. Stop at those lows. Yeah, I would target that. Get stopped out. So that's you have an inverse fair value gap as an entry there as well. So that's both. New York loss. You get another chance. So here actually, you get an engulfing candle over the candle that took us underneath the POI. Something like that. Go for 2R. Stopped out. And then a third entry. Let's see. Bang, bang, bang. 2R. What's the entry model here? Fuck. Oh. Okay, I lost my position. 1 second. Okay, we're back. So, this is the third entry we're looking at. Inverse fair value gap entry there. No sys day, because that is your engulfing candle. So inverse fair value gap, New York, plus 2. Alright. London, nothing there. Asia. Okay, let's have a look. No close above that one. So we get an inverse fair value gap here after engaging with this POI. Oh no, it's not inverse. Never mind. So no entry yet. No entry yet. Yeah, here we finally get inverse fair value gap. So that would be your entry. Stop at this high. Go for 2R. And there you go. So Asia 2R. This one never got to close above the bearish POI, so no entry model there. Alright, there's a lot going on here. Okay, so we open the candle here, close beneath it, no entry model, close beneath these other ones, and then finally here we get an engulfing candle. So that would be my entry, stop at these lows. Yeah, 2R. Instantly stopped out. You do get another chance, but it's like right towards the end of the hour, so I personally wouldn't take that. Let's see this one. Close above. There you close below. And you get an inverse fair value gap there. Stop there. Target that liquidity. Only 1R, I would not take that. We're looking for at least 1.5R. Oh shit, what just happened? Okay, there we go. Yeah, nothing there. Let's see here. I mean, yeah, there's just not enough drawn liquidity for a decent risk reward there. Alright, let's see here. What is this? London session. Candle opens here. Finally get this close above. And then get this close above. We're either looking for a sys here. Oh, sorry, engulfing. Or inverse fair value gap there. We finally get it here. But the risk reward's just not it. Yeah. 1.2R. It does go to TP, but I personally would not take that. Because looking for at least 1.5R. Alright. Asia setup. Candle opens here. Close above. No entry model yet. No entry model yet. So to enter, we're either looking for inverse fair value gap there or change in state of delivery there. So there's your entry. Enter here. Stop there. To stopped out. That's alright. Never get another close back below. We do here, but it's right towards the end of the hour, so I wouldn't consider that. Alright, bunch of PLIs here. Candle opens, get a massive drop down, and then looks like we're waiting for this middle POI to get engaged. And then entry would either be inverse fair value gap here or change in state of delivery here. So it looks like entry candle is there. Sorry, did I say SSD? I mean engulfing. Technically SSD would be here, but that's a story for another day. Alright, that's what I would take. Stop at the lows, targeting those highs. Let's see. Hour ends here. I would manually close the trade at the end of the hour. So that ends up being 0.8 hour. Alright, moving on. Nothing there. No close above the bearish POI. Alright, let's see. So we get an entry here. We change the state of delivery. Sorry, engulfing candle. Stop at that low. Targeting these highs. Stopped out. So it's gold. Engulfing candle. And Asia loss. Okay. Yeah. New York. Candle opens, we go up, down. And then this would be your engulfing candle. I would put my stop there. That one's a bit too far for my liking. And targeting 2R. Oh wow, actually doesn't hit it. Pretty much get out. Yeah, 0.14R. Right. Others. Oh yeah, nice one here. Start of New York. Candle opens, strong close below, and then inverse fair value gap here as well, or engulf this candle. That's your entry. Stop there. No drawn liquidity though. So even though it does end up running a shit ton, I would not take this because there is no clear target. So move on. Nothing there. Nothing there. Alright, we've got a bunch here. Let's start here. So here we get our first close above the POIs, but no entry model until here. But at that point, you're so far away from the POI and the RR is just not there. And then, yeah, it's just chop for the rest of it. Nothing there, actually. Okay, here. This candle opens, close above. We get a engulfing candle here. So if you wanted to enter, it would be there. Stop there, targeting that. Nice. 1.77R. TP hit. So New York plus 1.7R. Nice. Nothing here. It's a bullish POI. We do get closes beneath, but we never end up getting an entry model back above. Alright, we're halfway through December. Okay, we close underneath. We get our first close above here. Yeah, the risk reward is just not there. There's no real target, so can't really play here. Okay. Here again. Here is your engulfing candle. Long there. When you have a massive push into the POI like this, I like to just put my stop there, below the candle that gave us the entry. And then, yeah, you could target these highs. 2R. Nice, you literally get it in one candle. So what's that? Asia. Entry model is, yeah, we get an engulfing candle. We engulf the candle that took us under the POI. And there's also a bunch of inverse fair value gaps. So I consider that both. Alright, moving on. Oh yeah, looks like there's one here. Candle opens, we go up, we finally get a close below, and then here we get an engulfing candle. We engulf the candle that took us below the POIs, but yeah, the risk reward is just not there. I wouldn't take that. Alright, moving on. Nothing there. Here we get an entry model but no draw on liquidity, so nothing to take there. Alright, let's see Asia. It looks choppy as fuck. So candle opens, we finally close above the POIs here, close above again, and then back down. So you'd be looking at, yeah, so there's an inverse fair value gap here. So as long as we get a close below any POI, that is an entry. So yeah, there, stop just above the wick of this entry candle. You can target these lows. It's at 1.93R. Nice. technically, it's an engulfing candle as well. Oh no, it's not. Just inverse fair value gap entry. So it's Asia plus 1.3R. Alright, let's see. Nothing there. Here we do get an entry, but no draw on liquidity, so not taking that. Not taking that. No draw on liquidity. Yeah, both would have been winners, but I like to play with draw on liquidity. Like there needs to be a high for the target to reach for, otherwise it's just a gamble in my opinion. Alright, let's have a look here. Candle opens, we get immediate close below, and then we get a close back above here, but it's an inverse fair value gap where by the time you get an entry, it's here, and it's like the risk reward's just not there, and then it's just chop, chop, chop. Nothing there. Okay, here. No draw on liquidity, even though you get an entry model. Did not take that. Okay, this one looks good. Candle opens, pushes up, slowly chop back down, finally close back below here. So we need to either engulf this candle or, yeah, no fair value gaps there. Yeah, okay. So you would have to enter here. Personally, I'd put stop, yeah, just below the POI there. And stop there. Well, I would close it at the end of the hour, and that nets you 0.26R. A lot of gold setups in Asia, looks like. Interesting. Nothing there. Nothing there. Okay, let's have a look. So, right, close above, close below. Here is your entry, because we get a inverse fair value gap. Yeah, stop above this candle because that is way too far for my liking. Targeting to get stopped out. What there? Yeah, that's it. We get another entry, but it's like way towards the end of the hour. Alright, let's have a look here. This looks promising. Candle opens, surge up, come back down, close below. Here we get an engulfing candle immediately after. Entry there, stop below this candle, targeting these highs. 1.68R. Bang. Simple. Another Asia trade, wow.
Sure. It tastes good with.
Nothing there. Nothing there. Wow.
With sugar.
Okay. Alright, here we go. New York, candle opens up here. Bang, 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 go up, go up, go up. Finally get it close back below here. So that would be your entry for a short. It is really far from the POI. So stop would go there. Targeting these lows. 1.9R. Your entry model is we do get an engulfing candle over the one that sent us above the POI. And I'm sure there's a bunch of gaps in there. So I consider that a both entry. New York, that's at 1.9. Nice. Alright, let's see. It's like a London trade here. Candle opens up, we go up, no close above the POI until here. So we want to see a close below this candle for our engulfing entry. There's also a bunch of fair value gaps. Inverse fair value gap here. So we'll finally get that close on this candle. I'll put stop there, just above that. Nice drawn liquidity there. But that would have been a 3R, but of course we target 2R maximum. And there you go. See, if you targeted 3R, you wouldn't have got it. Rather have a high win rate. London, rare London trade. 2R. Alright. Almost there. We are at the 8th of December, working our way backwards to the start. Alright, let's look at this Asia trade. We have two POIs, huge close below, and then a bit of chop beneath. We get a close above here, but there is no entry model because there is no engulfing candle or no inverse fair value gap. So yeah, we never get an entry model here. Okay, this looks nice. Candle opens up here, 10 a.m. Close beneath here, and then we start to ride back up. We get an inverse fair value gap confirmed here, and yeah, I guess you can call that an engulfing candle as well. Long there, stop below this swing low, targeting these highs on the left. But of course, maximum of 2R. Bang. Very nice. Gold. Oh, intruders. What's that? Purple in New York. 2R. Nice. Let's look at the hour before that. This looks promising as well. Okay, so candle opens up here at 9 a.m. Go up. And then here we finally engage with the POIs. We get confirmed close below here. Nothing, no entry yet. Another close lower. And then this will be your entry candle here because We finally closed below the candle. Sorry, we closed above the candle that took us below the POIs. And I believe, no fair value gap. So long there, stop below this candle, targeting these highs, 1.14R. Well, yeah, I wouldn't take that. Even though we end up going higher, I don't like 1.16R. Alright, let's look here. 8 AM candle, opens up, comes back down, keeps going further down. No fair value gaps, but this would be your candle to engulf if you wanted to enter. End up getting it here. I'd put stop at these lows, targeting that high. Yeah, I'll take that, 1.47R. Close enough to 1.5, and you do end up getting that. There's a golfing candle entry. Oh, no, there's a fair value gap as well. There. Actually, since there is a fair value gap here, by this candle here, it's already inversed. So once the fair value gap has been inversed, as soon as we get any close above any POI, then above this POI, then we can enter. So that would actually be your entry there. Stop at this low, targeting these highs. Ah, okay. Nice. Give a bit of wiggle room. Yeah, 1.83R. So it's not an engulfing candle entry because, yeah, but it inverse fair value gap there. Alright, moving on. Nothing there. It's a bearish POI. We never get a close above and back below. Nothing there. Okay, this looks promising, maybe. Candle opens up, close below. There is your engulfing. So what, long there. No draw on liquidity, no clear target. I mean there is, but the risk reward's just not there. Would not take that. Let's have a look at this one. Close below. Nothing yet, nothing yet. We do create a bunch of fair value gaps. Fair value gap, fair value gap, fair value gap. Yeah, so by the time we get here, we have a bunch of inverse fair value gaps. So you can enter as soon as we close back above the POI there, stop below the most recent low, targeting this high there to in the bag. Inverse fair value gap entry, that's Asia to Alright. Ooh, this looks nice. Candle opens up, start of Asia with this bearish POI. We get a close above and then close below, but no entry model yet because this would be our candle to engulf for an entry. Are there any inverse fair value gaps? No. So you would have to enter here. Yeah, I don't like that. Even though it does go down, there is no draw on liquidity, so I wouldn't take that. Let's move on. 4 more days for December. Okay, let's have a look here. Might be something here. 10 a.m. candle opens. We have this bullish POI to play with. Close beneath it here. And then, let's see, this would have to be our engulfing candle entry. There is a fair value gap there, very small one. So, yeah, that would be your entry. Stop right below that candle. Targeting this high. 1.7, let's see if we get it. Yeah, we do get it. So it's gold, both, and New York. What's it? 1.69. This one, we never get a close above these bearish POIs, so no entry there. Nothing there. This bullish POI looks like there's something. So candle opens up here, get a bit of a run up, come back down, close below. This would be our candle to engulf. So long would be there. I'd go below that swing low. Targeting these highs. 1.76R. Nice. That's engulfing candle entry. Yeah. Green equals London. What was that? 1.76. Okay. Alright, what do we have here? 3 POIs in 1 hour. At the start, we close above, finally there. Then immediately engulf underneath it. Stop would have to go there. And targeting that. Yeah, the risk reward's just not there. Wouldn't take that. And then we keep going. So, even though we didn't take that trade, I would consider the powers of these POIs already used, because we technically had an entry model deliver from these POIs. So I would consider the hour done in that case. All right, let's have a look at this one. Start of Asia, 8 a.m. We get massive run down, close underneath the POI, therefore we can start looking for our entry model. There's a fair value gap. So we finally close above the inverse fair value gap here. Stop is really far. So I'll just put stop below this wick of this candle. So like right there. Target these highs. 2R. Nice. Man, it feels like we're getting a bunch of wins lately. I should really look for some losses. Almost feels like I'm cheating. But I feel like I'm being as objective as I can. I don't feel like I've broken any rules, any of my trading Bible rules. Alright, what do we have here? A lot going on. Okay, let's just start here. 9 a.m. candle opens, we get massive rundown. So we would look to engulf this candle, because that's the last candle that closed beneath the final POI. So we finally get it here. So that would be a long entry. I'd go stop below that low. Target these highs. Target 2R. Let's see how it goes. Wow. Another win. Like, what can I say? I really want to see another lose because this is getting a bit ridiculous. Alright. So that's an engulfing entry. I don't believe there's an inverse fair value. Oh, is there an inverse fair value gap? Oh yeah, there's a small one. But it's New York tour. Okay, let's go to this hour. Opens up, down, huge close back above. But yeah, the risk reward's just not there. There's no draw on liquidity, wouldn't take that. Let's go. Alright. Anything in London? No, nothing there. Alright, so we get this Asia play. Candle opens at 22.00, comes all the way down, we get a close beneath, and then finally we engulf it here. So that would be your entry. Stop at that low, targeting these highs. 1.8 AR. Let's see. Yeah, we get stopped out. Okay, finally a loss. Nice. Okay, moving on. Nothing there. Whoa. Okay, let's see. New York, candle opens here, 10 a.m. Close below. No entry model because there is no engulfing or inverse fair value gap. And then we get another close below the second POI. But yeah, no entry model, so no loss there. Let's see this one. This candle, POI never gets engaged. Alright, let's look at this one. Very choppy. So candle opens here, 8 a.m, start of New York. We go up, come close beneath it, and then we immediately get an engulfing candle right after it. So that would be a long entry. Stop there, target these highs, and of course we get chopped up like crazy. Yeah, so this hour would destroy you. Okay, so in order to enter again, I would want to see us close above this candle because that took us back below the POI. We get it there. Stop there, target these highs. Stopped out again. I'd consider this a both entry because there's a fair value gap here as well. Nice one. And then I reckon I would have lost on this candle again. Yeah. So we get inverse fair value gap there. We close above it here. Yeah, it's an engulfing candle as well. Depends on where you put your stop loss. Okay. So if I saw this, into there, Yeah, I'd probably get greedy and put my stop loss there if I'm being completely honest, and I'll get stopped out. And then, yeah, by then the hour was almost over. I wouldn't try again. So 3 losses on this candle. Nice. On this hour. Okay, almost there. 2 more days for December. Let's look at this London trade. So we get a nice run up. Finally close beneath it here. Obviously a bunch of gaps that we inversed. And engulf the candle that took us above the POI as well. So there's your entry. I wouldn't go stop up there, it's way too high. Just above this candle. Target these lows. Yeah, that looks good. 2R. We'll get it there. So it's gold. Both entries. London, 2R. Okay, get these Asian POIs. Candle opens, come down, finally close above one of them here. And then, is there an entry model? Okay, so there's a fair value gap. And we finally close below here. So there's your engulfing and fair value gap entry. I wouldn't pull my stop there, that's way too high. Just above this entry candle. Targeting 2R. Bang. Nice. Last day, 1st of December. Okay, nothing there. We have a bunch of bearish POIs, but we never closed above, so never engaged them. Same with this one. We did close above the bearish POI, but no close beneath, no entry model. Let's see. London, there is a bullish POI. So we engaged the POI very late in the hour, so with only 10 minutes to go. Personally, I wouldn't take that just because the hour is almost ending. But you would have gotten a nice trade if you hopped into that for 10 minutes, but I'm not counting that. Is that it? Should be one more Asia. Oh no, that's it. Okay, so that was all the trades for December. Let me pause the recording and put these into a nice table, and then we'll go over the stats. All right, so taking some time, and I've managed to collect all this data for December and put it into an analysis table. Yeah, I also did NQ, but didn't record that because the recording would be way too long. But obviously just did the exact same process as I did with gold, as you saw earlier. So here are the results. We'll look at this table first. So we can see, all right, let's just look at the grand total. So firstly, we can see 43 wins, 30 losses, for a total of 73 trades with a 58.9% win rate, a total of plus 45 R, and an expected R per trade of 0.62 R. So yeah, as expected, the model is definitely profitable, but like with all edges, it comes down to discipline and risk management and being able to follow your rules and just executing like a robot without feed or fear or greed. Yeah, so okay, let's go a bit further. It looks like gold has a slightly better win rate than NQ, so an expected R of 0.7 R per trade, whereas NQ has 0.53. If you've never heard of expected value, it's just like, if I take one trade, what can I expect to get from this one trade over the long term? It's essentially just like total trades divided by the result of R. So like that's like the main figure we want to look at when determining how profitable a system is. So yeah, gold did look a bit better, but obviously still small sample size, so can't say too much about that yet. And then we'll look at the second table here. We've got broken down by the different sessions, because I was really curious as to which sessions we should trade. Most of us have things to do outside of the charts and we don't want to look at screens all day. So I think it's important to figure out which sessions are most profitable. Of course, this is still a small sample size. I'll still need to add more to it as we go, but looks like London is surprisingly the most profitable session so far. Obviously a small sample size again. New York was actually quite the lowest, even though it had the most trades, but yeah, big number of wins, big number of losses, still positive win rate, still positive expected R value, but yeah, behind Asia and London. So yeah, interesting figure there. Looks like London tops it so far. Yeah, and then the last thing is, this surprised me a lot. So I also categorized the results by entry model. So there were 3 entry models, either just an engulfing candle or just an inverse fair value gap, or both at the same time. Yeah, surprisingly, engulfing by itself was really low, only 0.14 R expected per trade. So like barely positive, barely profitable. And then inverse fair value gap was really high, 1.15 expected R, the highest overall. And I guess it makes sense. I used to trade an inverse fair value gap model previously. And yeah, inverse fair value gaps just seemed like a super strong indication of a reversal. So can't say I'm super surprised there. Look at that, 16 wins, 5 losses if there's an inverse fair value gap. Insane. But yeah, surprisingly, when you have both an inverse fair value gap and an engulfing candle, it's actually a lower win rate than just an inverse fair value gap by itself. But I guess it kind of makes sense, because sometimes you can get an inverse fair value gap before you actually engulf the candle that took you through the POI, therefore giving you an earlier entry with a better risk-reward ratio and therefore a higher probability trade. But yeah, I will still need to collect more data and look into that more. But yeah, so far it seems like gold during London or Asia with an inverse fair value gap entry model seems to be the best play. But overall, regardless of gold or NQ or Asia, London, New York, or which entry model, it all seems profitable. But yeah, this is something I'll continue to work on. I'm going to backtest more months. This is only December 2025 so far. But I'll try to do 1 month of backtests every weekend when the markets are closed. I can take some time. So next weekend, or maybe even this weekend, I'll do November as well. And I'll do weekly videos with the new updated data, see if there's any interesting changes and which sessions and models are most profitable. So yeah, hope you like that one. Let me know if you have any questions. Cheers.